Hey guys, I just want to do an update here. It's Monday after the close. Pretty busy in the room this morning. We didn't get a lot of time to talk, or I didn't put out a video last night. So let's just, if you missed what we were doing today in the live trading room, I went over some of this stuff, and we can just do a top down starting with the dollar. So if you get the dollar right, you're going to get a lot of other things right in global macro. So nothing's changed here. I mean, 92 is still the right level from a long-term perspective. It's a higher low from August of last year. We held it again this year, and no signs that that's going to change anytime soon. Right? If you go to the weekly level, it's the same thing. Now, this regression channel is kind of showing you that the posture is bullish. So you have higher lows here, you have higher lows here. All right, this cycle's still turning up. Now, be it, I mean, it's getting pretty high, but still bullish. So you'll be able to see this a little more clearly on the daily. All right, so here's 92. This is the long-term trend line. Long-term TMS line, as I call it. There's a higher low here from June, higher lows here. Alright, and this is 2 standard deviation regression channel that covers more of the long term. And then this is your intermediate term. Okay, so you have a lot of resistance. The highs from the end of August, 2.5 weeks ago. These were the highs again at the beginning of August. You also have pi here that's now, it's become pretty flat. So that's indicative of a range trade. And it's also showing you the stalled out momentum. As far as the dollar, the euro, it's the same thing. It's just the it's the same thing. It's just been in a range trade. So what I've been paying attention to is this more near-term range. You can call it 95 to 97. All right. So I don't really expect this to move much in front of the Fed on Wednesday. But there's also been an ebb and flow where we kind of rally. The dollar will rally into these events, and then the market gets disappointed. So we'll see. Maybe it's the same thing. You can push a little bit higher here on the dollar come Wednesday. If they go, then the dollar should probably make new highs. I mean, might not do it in one day. It definitely could. But you would expect to see this trend to continue, I would, at least up into the upper channel here. Alright, and then the highs from last year are still up around 98, 98 and a half. But, I mean, I don't know. I mean, there's no sense in trying to forecast what the Fed's going to do. I mean, their model is, they don't have a model for one, and they're just wrong consistently. So you don't really want to chase their tail. Logically, half of the time what they do doesn't make sense anyway. But I would say, if you had to take a guess, I mean, do they want to really raise rates? I mean, they have zero confidence in the outlook for the economy. That's clear. So do they really want to try to rock the boat in front of the election? I kind of doubt it. So maybe we trade up here, fall off. But the points are, this is resistance. All right, this is the bottom of the more near-term range. But even if you were to follow these lows, anyway, it's just been kind of a choppy mess. All right, so that's my thinking on the dollar index. Euros are going to be more of the same. It's just been a choppy range trade. But there's good trades in here. Just because we're not, there's not a ton of momentum where you can really make a lot more money in the momentous trends. I mean, these rallies are shortable. All right, we sold into here pretty well, covered some stuff Friday. So now I want to be a seller back anywhere 112 or higher. And I don't see what's going to get you out of this choppy mess. I mean, anything's possible, but you want to be a seller. Unless we take out these highs, but really, even all the way back to 113, you just have to time it right with the cycle, but you can pick off some good points to sell and make some money. So I think the market will have a hard time retracing all of this move though. All right, but that's kind of the range now. I would use 111 to 113. I drew this the two standard channel here, 113, 111. You guys get the point. That's still a range trade. Pound yen. This is actually, I'm a little bit more constructive and a little bit more opinionated here. This is some stuff I was doing with some coaching guys. If we take a look here, gosh darn it. So you can see that this was the intermediate term uptrend. Okay, I should really do these videos with my GoToMeeting tool so I can draw on the chart. But this was bullish candle right here. So we took a long. We took a long here, came out of some of it, but then we bought a little bit, sold some. But I took the risk off once we took out this low right there, and I actually leaned short, which didn't look good once we made new highs here. So I took half off, and then it came back in my favor. So I'm still small short from this point, and you can see we're lower than the cycle. But I like how these bands are rolled over. We took out these lows. It's much more clear now that the trend or the path of least resistance is down. So if we get a rally here on pound yen, I want you to sell it, and I'll be getting more aggressive on any type of rally. But we're still lower than the 4-hour cycle. The daily is the same thing, very oversold. Not oversold, excuse me, just lower than the cycle, right? So there's lots of room for time to rally back up. And then the hourly, it's the same thing. I want this to come up, I want this to cross, and then I'll feel more comfortable taking some more shorts. So, but today, I was looking for shorts. There was a couple good trades in the 5-minute. All right, some good sales in there. This was a good move lower. You could have played the 15-minute cycle. All right, so I'm going to continue to look to do more of the same. But we'll see. The yen definitely looks a lot stronger again this week, and the pound looks a lot weaker. You take all my garbage off that I've been drawing. This is pretty bearish daily candle, so I like playing this short. You broke these higher lows. All right, and it looks like the market wants to test the lows again here. So, the monthly cycle's low. That's not good for the bears, but I would say the weekly's got a lot of room to go a little bit lower into October. This is a setup that's just to me is just looking more bearish. You got a lower high. You took out the swing line, lower highs, or excuse me, higher lows. So let's see if we can get a retest of the lows from July. I think you want to keep playing with a bearish bias on sterling. Even dollar yen looks to kind of be changing course again. All right, so it tried to turn the corner and it just can't do it. The yen just continues to want to strengthen. So here we have a weekly cross. It easily turned back down into October. Easily. All right. Look at this trend all year long. Lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. Every time we get back to the upper band, boom, lower high. So it looks like we want to test 100 again, or par. All right. That's pretty much it as far as Forex. Man, I got so much going on in this chart. We're counting the cycles here, the 8.6 count. 1, 2, 3, 4, 5, 6, 7, 8. So we're into a new cycle now. I don't want to go into that right now. If we look at the hourly, I did sell pretty heavily here today. This morning we were trading it around. It wasn't the greatest morning, to be honest, but the 4 hour, uh, I liked how this crossed earlier in the day. So I added to my short, stop above the high, and whatever I added today, and then this is my lower high pivot, my TMS point, and now this is my new one. I also like being short up here, 2160 to 2170. But that's one way to play it. So there's more room for this to cycle lower. Percent D is only about halfway down here at 45. All right, so I got more short today. You would look. I have some bids down here, 21.25, and then I want to see if we can actually test down here around 21.11. All down here. You should be bidding in front of this though for sure. And then long bonds. This is pretty clear. Here's your 8. This is showing you the immediate trend, the trend that the market's in right now, which is bearish. But long term, you could easily hold here. So we're trapped between the 200, give or take a little bit of room, and the 8. So it's either fail here, going to test high, or you can rally back up to the 170 area again, which we did a lot of work at. So that's pretty simple. You can play it either way. Play a long-term long, or you can stay short on this intermediate term trend. Just depends on how you play it. Alright, and then oil's oversold. I need a bounce to get really back involved. I mean, I'm offering some at 45, but really the place to sell is closer to 45.80, 46. I mean, that's where I had the good chunk of my size was short from 47. So if you take out these lows, though, we can drift a lot lower. So there's kind of two ranges in play with oil. It's getting a little bit more choppy. Big picture range, I mean, we're looking at the Novi contract, so it's 53 to 41. And then the intermediate term range has been 50 to right here, 43, call it. If we break these lows, and you should look for a test of 41. Alright, but I mean, this is what I mean. We've already had the move from here to here, from here to here, so I kind of expect a bounce. So don't get caught leaning too short down here. You want to let this come back up and then play the short from this point in time to this point in time. From this point in time to this point in time. Even from here to here, everything's relative. This was an okay short though. You're supposed to take some risk off once it got back above that high. But that's the rhythm. From here to here, here to here. Here to here, here to here. Alright guys, that's pretty good. And gold, it's the same crap I've been saying. If you get below 13.11, this is a big level. I'd rather you probably just be flat and on the sidelines going into Wednesday. Because the risk is that this big level breaks and you're going to get a flush. I mean, if they raise this at this meeting, it's going to be great for gold. I mean, we could get gold back here to 1250, and you'd rather be a buyer there. So you could be on the sidelines here. It makes a lot more sense. Or a small long. I'm a small long. But if we take out this low, I'm going to be out quick. So I'm not even going to go into the Fed long gold. I'd rather get knocked down, gap down. Let me put it back on down here. If it goes the other way, big deal. I mean, this is a long-term bull market that's in place, so if I miss the next 10, 20 points, we'll just catch it on this side. And I think there's a lot of crowded longs still on the gold market, so we actually need this flush lower to kind of rinse out some of the weaker longs. That's pretty much it, guys. We'll talk to you in the morning. You know, if you're new, visit the site. It's JenkinsRM.com. We're actually going to be rolling out the third version of the website, so it's going to be cool. I'm excited about it. You know, we just started in this company this year, and we're already probably going to be rolling out the third version hopefully this week. And you know, it's going to have all kinds of different updates for members and everything we want to do going forward with the live room, bringing on some institutional analysis. It's all that good stuff. Alright guys, we'll talk to you in the morning.